John Melton coming to you live on this fantastic Friday. How you doing? How's it going? Listen, I have a very special conversation for you today. I'm going to be interviewing a very good friend of mine, somebody that has had a lot of success in the financial industry. And he's somebody that I've gotten to know over the years. We've become very good friends. And he's really had a lot of success in the realm of financial services, creating this tax-free retirement income program that I'm excited for him to talk to you about. But for those of you that don't know me or you're coming across my page for the first time, my name is John Melton, been an entrepreneur, been in network marketing now for 16 years. And my wife and I have been full-time entrepreneurs for the last 10 years. And over the last decade plus, we've seen a lot of different types of investments. In fact, back in the day, I did a lot of real estate investing. I bought high and I sold low. That didn't work out so well for me. Lost $1 million in real estate. We've invested in cryptocurrency. We've invested in companies. We've invested in a lot of different things. And something that we've become very passionate about is financial services, meaning creating a scenario for not just life insurance and having a death benefit. God forbid if something happened, I want to provide for my family and make sure that they're safe, make sure that they're secure, right? I want them to have security, but also living benefits. For those of you that are not aware of living benefits, where basically if you have something happen to your health, you could still get money from a financial services company to help you with your existing bills and that sort of thing. So I'm not going to elaborate a lot about it. I have a good friend of mine, Mr. Brett Grossman. And for those of you that don't know Brett, like I said, Brett's also an entrepreneur. We're business partners in a traditional business. And he's just had a lot of success when it comes to financial services and speaking on this topic. But I'm excited because this is an investment that actually I first heard about from a good friend of mine years ago, Nefty Mendiola. And I remember when he first started explaining to me, the program and how you can create tax-free retirement income legally and really set yourself up to have, again, God forbid something happens, your family's taken care of. But if something happens to you and you can't work, having what we call living benefits. So this is a little bit of a different type of interview than what I typically do on my business page, but I think you're going to get a lot of value from it. And I'm excited because I'm going to be asking Brett some great questions and really have him share a little bit of his expertise on this topic. So excited to have him here. And Brett, I think you're unmuted. So at this point, if you could say hi to everybody, we really appreciate it, brother. And I'm excited to get into this conversation. It's about time we finally did this. And I'm just excited to have you here, man.
John Melton, so excited to be here with you here today. It is like the mega powers coming together. It's like when Hulk Hogan and Randy Macho Man Savage finally became tag team partners. They finally got in the ring and won the tag team titles right here, baby.
Oh, that's great. That's great. That's true.
We've been talking about this for months.
So which one of us is Macho Man?
I am.
Yeah, that makes sense. I'm Hulk. Okay. I don't have 24 pythons, but that's okay.
Yeah. No,
I am working on the stash a little bit. Nadia's thrilled about that. So, but on a serious note, man, you and I obviously have been in business together a while now, and we've had a lot of fun working together. And I've seen you really grow and develop into this like financial expert at this point. And I know that there's a lot of different things that we could all invest in. And, for me, for Nadia and I, we wanted something that we felt was a safe play long-term, something that had different benefits to it. And it's actually something, for those of you that read Tony Robbins' book recently, where he interviewed all these financial gurus and, he went out there and really did a lot of research. This was actually a program that he even recommended as well. So, and again, I don't want to keep the mystery going. Brett, I'll let you elaborate a little bit on it. But before you do, if you don't mind telling everybody, just a little bit about you, your background, your story, and then we can get into the nitty-gritty details.
Yeah, absolutely. And no, you're absolutely right. One of the things that has attracted me to the financial services industry was the product of an indexed universal life because of the fact that I have it for my children. I'll talk a little bit about the structure and what that looks like for them because my wife and I both have one. But it was one of the things that caught my attention 8 years ago, but it wasn't the main reason. One of the main reasons was being able to, like how you preach to your whole network marketing community, which is having a plan B. Outside of my full-time job, being able to create another avenue and another stream of income. And, like some other individuals, what started out part-time wound up turning into life-changing income, most importantly, life-changing clients, right? So the difference for us is we prefer to be able to work with people who are repeat clients, individuals who we've worked with in the past 6 or 7 years ago and now have come back, or we've reached back out to them, touched them again a year later, and now we're able to help their kids, for instance. Now, it wasn't always like that. I started out very part-time, actually working in the senior market and doing some things in the final expense marketplace. And then eventually, like any other industry, you always want to continually be progressing. And so we began to progress and transition over to the mortgage protection industry and helping new homeowners and people who just did a refinance protect some of their greatest assets. And now we're here again, reinventing ourselves, and what I like to define as putting a disruption in the marketplace. And what I mean by that is, this is not, and by no offense, this is not our parents or our grandparents' old insurance policies. It's not the same old, the old whole life policies or the term life policies or even the universal policies that develop cash value. This is something where this allows you to operate as your own bank. This allows a loophole based on the fact that there's an insurance product attached to an investment product. The loophole allows it to be tax-free, and we'll talk a little bit about that. And then you had spoken about it, the living benefits, and we'll go through those a little bit. Critical injury, critical illness, chronic illness, terminal illness, 4 of the top major living benefits that statistically most people are going to need to exercise throughout their lifetime, as opposed to, unfortunately, just, let's say, passing away. So we're putting a disruption in the marketplace, and I feel like here in 2018, this is the new hot version of being able to do financial services. No more of the stuffy suits with the straight ties and the briefcase. That is a thing of the past. We're bringing a new flavor here to the financial services industry with this product for sure.
No, that's awesome. And I love what you were saying before too about with network marketing, Nadia and I obviously have built a very successful network marketing business. We've gone out and done a lot of training inside the profession. And, we always talk about having a plan B and supplementing your income and, really having financial security. And what if you lose your job? What if your business goes out of business? And this is something that goes alongside of that same conversation, right? It's really congruent with our overall philosophy. And it's something that we invested in and continue to invest in. And it's something that we, probably don't promote enough, only because there's only so much we can promote, right? There's only so much we can talk about. But I have mentioned the fact that I have a financial services agency, and it's something, obviously it's a traditional business. It's something that, you and I have done together for several years now. But for me, the reason we even had interest in getting involved in that space, and, just like we did real estate, right? We got involved in real estate because we wanted to create more financial security. We wanted to have other income streams. The problem is with real estate is it's very high risk. It's very volatile. And it's something that, quite honestly, I didn't have a professional helping me with. So the reason we really love the IUL, the Index Universal Life, some of the different benefits that I know you're going to touch on, is for us, it was creating that long-term security with that tax-free retirement income. And I know, first of all, I would love for you to touch on how this program can set you up to have tax-free retirement income. Because I think anybody hearing that's going, hold on a second, how am I going to avoid taxes, right? How can I be my own bank? How does this program work? So if you could elaborate on that, that'd be awesome.
Yeah, absolutely. And, one of the funny things is, and you and I are very similar. We're very similar, in our work styles. We're very similar in how we work our faces off every single day. You and I communicate at least 4 or 5 times a day. Obviously, we're in 2 totally different industries, but we still work together on this back end stuff. And so, you know me very well, just as well as I know you very well. And we both get this similar type of rebuttal. Like you just said, it almost sounds too good to be true. Mm-hmm. And so, in life, certain things are true, and that is very true. So what I'd like to do is, maybe before I go directly into answering the question, I'd like to paint the picture by giving all all the subscribers who subscribe to your page an idea as to just a quick background. By in no means am I an accountant, do I give tax advice or anything like that. I am just going to speak based on my experience and how I know the IUL operates. But we need to take a step back and we need to look at what does the majority do. And when I say that, what I mean is the majority of individuals who are either self-funding a 401k, or they work at a nonprofit, maybe they have a 403b, or they're in a traditional, full-time or part-time job, and their employer offers them a 401k. There are typically 3 types of risks that most employees don't know about. And if we take it a step back even further, when you begin the paperwork, when you just became hired, one of the first things they do, John, is they put you into it. And I know this, right? Because I was an employee in higher education for over a decade, running higher education proprietary schools. And I remember sitting down at Kaplan Higher Education Corporation. Before I ever started, they sat me down with an HR person. They said, here's your 401k. And I knew nothing about investments. I know nothing about the stock market. I know how to recruit people into higher education. They said, do you want to go more aggressive, or do you want to be a little bit more passive, or do you just want us to pick them for you? And I said, go ahead and pick it for me. And you know what? That's what a lot of people do. Now, maybe in today's age, some of the younger folks, the new generation, maybe they want to get a little bit more aggressive because they see the Bitcoins and the Ethereum, right? And they see, all the different cryptocurrencies, and they think to themselves, well, maybe if I get a little bit aggressive in the market, I've always wanted to be in the market. Whatever that might look like for you, there's always 3 risks. There's what's called structural risk, you have what's called market risk, and you have your tax risk. So what does all this mean? So for instance, on a 401k or 403b, you cannot touch your money until you're 59 and a half. Now, imagine being a 30-year-old individual and you just got started at your job and you have the mindset that you are going to work there for what? The next 20 or 30 years. And then you're going to retire at age 60 and you'll live off your retirement income. Well, let's say you're 30 years old and you decided that you wanted to retire in 20 years. So now you're 50. Well, now you have to wait, right? 9.5 years, because here's what happens. If you touch that 401k or that 403b before age 59 and a half, there's a 10% penalty, as well as you got to pay income tax. So you just put 20 years of blood, sweat, and tears into a company. You just went ahead and you invested. And I'll give an example later on of specific numbers that you can invest into a 401k, what it'll look like for you. But now you cannot touch the money. So imagine, what about if at age 50, somebody, God forbid, had a heart attack and they needed that money, that income, to survive on at least for the next 9 years? Well, they can pull it out of their 401k, but again, I just told you, you're going to be penalized and taxed. Well, with an IUL, you're operating as your own bank. You could literally at age 50, if you've been contributing, let's say for the same period of 20 years, you will have cash value that you can pull out within the same week. Bam, check to you, 50,000 tax free. And I'll explain again how that all works, but that's your structural risk. But then you have your market risk. As of last year, when the market wrapped up in 2017, the market was actually up 19.6%. And I don't know if you know, but the first 2 months of 2018, the market was down 12%. So it actually went back and it dropped. And so literally, if you had a 401k, a 403b, if you had any of your investments, John, in the market, you lost 12% during the first 2 months. Mm-hmm. And it's like that across the board with any type of investment where you have a retirement investment wrapped into a 401k or a 403b. And again, I don't want to sound like I'm coming across as almost negative about that product. I need to do a comparison, and I want to share with your subscribers and your followers that this is what most people do. So I can only speak on behalf of what most people do and what we do, what you and Nadia have done, right? What so many other leaders have done in your industry and my industry to set themselves up. So there's your market risk. So remember in 2008 when there was a bubble and the mortgage industry, were you still working mortgages back in 2008?
Yeah, 2004, I think I did my last loan. I started in 2004 and I think I did my last loan like the beginning of 2008. right when the bubble was bursting.
So at that time, the market gave back 50%. So if you had $100, they gave you back $50. Ask yourself this question, right? Imagine working for 20 or 30 years. And the day before you're ready to retire, the market drops 50% like it did in 2008. Remember, the day before you're ready to retire, you just put 20, 25, 30 years in. You're supposed to have all this money in your 401k, your 403b, and your investment product. And you just lost half your money overnight. What do you do? What do you do?
Yeah, got to go back to work.
Mike Schless.
Yep.
Mike Schless's mom was set to retire in 2008. She wound up working to 2011. And I know that anybody watching what I just said probably knows somebody intimately or knows somebody who had to go work back at a home. And there's nothing wrong with that, but they had to go back and work at a Home Depot or work at a Walmart or a Target or a convenience store, or had to stay at their current position. They had to recreate themselves for another 5 to 10 years when they were supposed to be experiencing, right, the good life, the golden years, as they call it. But this is the risk that you take. One of the third risk is the tax risk. And our national debt right now is at $19 trillion. It's a fact. It's just the way it is. This isn't a political conversation. We're not going to get involved in anything like that. That's just the status of, where the country is. So one of the questions that I'd like for everybody watching is ask yourself this question. Do you think over the next 20 or 30 years, and keep in mind, taxes are as low as they've ever been today. Do you think that over the next 20 or 30 years, taxes will continue to stay low, go lower, stay the same, or go up? Let me ask you, what do you think? Exactly. And over the next 20, 30 years, we're both dads. We both own homes. At the end of the day, we're going to pay off our mortgages. So you don't have that mortgage write-off anymore. Your kids are grown. You don't have the child write-off. So you're assuming more tax risk on top of this all, right? So you're assuming more tax risks. And over the next 20, 30 years, odds are, like you said, it's going up.
Yeah.
So any comments about anything that I just shared with those three risks?
No, I think that's great. And I think ultimately everybody can relate to that. I'm reading some of the comments, and, if you guys do have a couple questions for Brett while I have them, feel free to drop them in the comments. I'll do my best to try to read that while we're watching. But yeah, I think it's important for people to know that you've got the risk of taxes later on. But yeah, if the market crashes or continues to be as volatile as it is, like that's a real risk. And there's a lot of people, and this is part of the reason people get involved in network marketing, right? Because they need to supplement their income because they don't have enough for retirement, or they don't have enough, at their jobs. And I think it really is important to have something in place. But the question is, what do you set up? There's so many opinions out there. There's so many options. So I'm excited for you to elaborate.
Yeah, absolutely. In order for me to really give you the scope of what it looks like, I'll give you an example. Let's say you had an individual who is making $75,000 a year in income at their job. And this is kind of the scenario of, do you want to pay taxes on the harvest or the seed? So you have an individual and they're making $75,000 a year, and they're going to be working at their job. I'll use the same example we'll call it 20 years, for example. Now they're contributing $7,500 over the course of, we'll call it, for 30 years. Let's use 30 years, for example, $7,500 for 30 years. They're deferring $2,500 of that. So they're deferring $2,500 in taxes annually. What that equates to is they're actually deferring $75,000 in taxes deferred over 30 years. That's pretty cool, right? To be able to defer taxes for that's why everybody does the 401k, because they're incentivized to defer taxes. Well, when they get set to retire, they want to retire and not have a change in lifestyle. Would you agree with that? Isn't that the whole reason why you're contributing to your retirement plan, so that your lifestyle won't change when it's time to retire?
Yeah. You don't have to work. That's the idea, right?
And what do you want to do when you retire? You want to go to the beach. You want to travel, right?
Yeah.
You want to do all kinds of stuff. Well, you want to take withdrawals of $75,000 annually, let's say for 15 years. So you get set to retire, you work for 30 years, you defer taxes, and you want to keep your income at 75K for 15 years. Well, at that income level, your tax bracket, you're going to be paying every year $25,000 in taxes. So you right, they encouraged you to defer, to have more in your paycheck, not really understanding that when it comes time to utilize the money for when you're going to need it most, based on your income level at 75,000, your tax bracket, you're paying 25,000. That equates to over $375,000 in taxes over 15 years, John, and that's $500,000 over 20 years.
No bueno.
Right? So the question is, does that make sense? I mean, so here's the IUL. If you could have market-like returns without market-like risk, would you be open? Would you be open to hearing about that? Now, not everyone is going to qualify for an index universal life. Number one, you have to be in good health. A lot of what we do with Freedom Financial is what we call simplified issue. It's a non-medical privilege. So if you're in good health, you can get up to $1 million in an index universal life as long as you're in pretty decent health. Now, if you have a couple things and maybe some pre-existing conditions, you can do what's called fully underwritten, where you go through the nurse and a medical. And again, not everyone is going to qualify because, again, to keep in mind, one of the points here is what you spoke about earlier is living benefits. Living benefits come with an index universal life. And if there's anybody watching today who has a similar product and maybe they got it with another company, I would implore you, I would say, listen, open up the first 3 to 5 pages of your policy and take a look. Does it say critical injury, critical illness, chronic illness, or terminal illness? It'll say it in black and white. Look, if you can read and write English, it will be there and it will tell you the definitions. I'll give you an example. A critical injury, for example, you're on your way to work on a Friday afternoon and some 18-year-old kid, for example, is texting and driving and goes right through the red light and forks you. And instead of being on your way to work, you're on your way to the hospital. And you can't show up to work for a year. The question I have is, what does your 401k do for you now? What does your Roth IRA do for you now? Now, if you're in network marketing or you're in financial services and you have a team of individuals, maybe you're in a different position, but not everybody has that. Would you agree? Not everybody has that. And what do you think, right? So all the people, if you just took the most intimate group of people that you know, John, and that situation happened to them, what would life look like for them, do you think, over 6 to 12 months?
Yeah, most of them be in trouble.
And when you say trouble, what do you mean?
Financial trouble. I mean, they couldn't pay their bills.
Yeah. They couldn't, right. They couldn't pay their bills. And when you can't pay your bills, the last time I checked, the bank doesn't care. And now, we're not laughing or making light of it. It's a fact. And then that's when they put the orange sticker on the house. And then that's when the phone starts ringing and the bill collectors. So it protects you in that situation. A critical illness could be a heart attack, stroke, cancer, something major, something that maybe at age 30, at age 40. How old are you?
37.
Dude, you look like you're 27.
Yeah, that's right.
It's all that liquid collagen.
There you go. That's it.
As we sit here together having a good time, we're in great health. But that can change overnight. Yep. I saw a post that Nadia had put out on Instagram, and I believe it was she had just dropped the kids off. Yeah. And she had heard, what was the story?
Yeah, there was a woman that same school dropped her kids off at school and got in a car accident and died on the ride home. It's just awful, man. It's just, just never know. You just never know. I had another friend of mine reached out to me this morning and he found out he's got prostate cancer and he's, in his 40s. So you just never know. And that's why it's just so important to be protected, because you don't want something to happen and then start trying to find solutions, because at that point it might be too late.
100%. And everybody thinks it'll never happen to me. That'll never happen to me. I'm a cautious driver. Nowadays, everybody has their phone in their face when they're driving, right? So there's an example. Chronic illness, by definition, is when you can't perform 2 out of 6 living activities. You can't bathe yourself, you can't dress yourself, you can't feed yourself. I mean, that's 3 out of 6 right there. And terminal illness would be defined. You went to the doctor, you got a poor report, and he said 12 to 24 months is what we're looking at.
Oh.
Well, I know. And so why I bring these to your attention is because most insurance policies, like a term life or a whole life or even a universal life, have zero living benefits, meaning they only work when you're not here. And by definition, life insurance is meant to leave a monetary value behind to a beneficiary as money to live off of. And the rule of thumb is you're supposed to have life insurance, which is 8 to 10 times what your annual salary is. That's the rule of thumb. From an investment standpoint, the rule of thumb is you should be redirecting, if you already have a 401k and your employer is matching you dollar for dollar, you're going to be taxed on that, just like how I had spoken about earlier. But here's the key. If you are contributing anything over and above what your employer matches you, you're going to get dinged twice. He is not our favorite uncle in Uncle Sam. He is not the guy you want over for Christmas, right? Because he's hitting you twice. Why? Because you want to be able to have more stability and have a better life provided for yourself in those golden years, yet you're going to be taxed twice on it. And with an index product, because you have that life insurance policy attached, it is a non-taxable item by state law. And so, you have the living benefits that come at no charge. I'll give you the example. Let's say the 50-year-old, again, who's been employed for the last 20 years, wakes up on a Friday and has a heart attack and can't make it back to work. Well, they would have the option, for example, let's say they had several $100,000 in cash value. And for anybody watching here, that is something, and I'll explain to you what I have set up for ourselves and for our children, but you very quickly, within 20 years, can save several $100,000 if the IUL is structured properly. That is the key. It needs to be structured properly so that you're not doing the minimum to it. The minimum doesn't allow it to perform the way it needs to perform. It's like having a race car and not putting the right type of gasoline in the race car, right? It's not going to perform the proper way. And so you could either exercise the living benefits and receive a lump sum benefit, or get monthly payments wrapped around your expenses, like your mortgage, your bills, your utilities, the school, kids' school, all that stuff. And or you have the option to pull from the cash value. I spoke about that earlier. So you have 2 different options. You can exercise the living benefits. You could exercise the cash value, maybe split the 2. Okay. Understand that when you pull from the living benefits, it pulls from the face amount of whatever the IUL is. 200,000, 500,000, a million, 2 million, whatever that number might come out to be. That's where somebody like myself or somebody in our organization would, instruct you on what is the best payment. So that's another question, that we do get is how much does it cost? And my answer is it's a customized program. We leave it up to the client to decide how much they want to contribute towards their IUL. And again, based on that, it allows you to figure out how much am I currently putting into my 401k today after watching everything that I spoke about. The antenna just went off. How much am I putting in? And now I want to maybe take 3 to 5% of that and now redirect it into something, that's tax-free.
And really powerful because, and just to, maybe put it in some layman's terms for people, basically it's life insurance if something, God forbid, does happen, just like any other life insurance program. But if you live and have a health issue and can't work, can't perform the activities to produce income anymore from your job or business, you can actually take money out of that IUL that you've been putting money into. You can actually pull money out of it and or take advantage of some of the living benefits, almost as if when you die, they write a check. You could actually have money given to you from the insurance policy if you live, but you need that money to, go towards the bills that you no longer can pay for because you can't work. Like, I just think when Brett talks about this, like, you really understand that it does protect you in any scenario. And then let's just say you're super healthy. Nothing ever happens to you. You live to be 50, 60 some odd years old. This is where it gets very interesting. So I know you're going to talk about this, but this was the part that I got so pumped about, because literally you can get a check every month, depending on how you structure it, like Brett said. And for those of you that are listening, and you're like, hey, I got to hop off, or I can't listen to the whole thing, I want more information. Obviously, you can reach out to Brett. You can send him a PM, private message him. You can follow him on Facebook, connect with him, whatever. But this is where it gets really interesting, what it can create for you long term. So sorry to cut you off, Brett, but I just think this is the best part about it.
This is the best part about it, is that you're creating something, and it's actually a check that they'll send you annually. And it's income for life, tax-free, okay? And I'll give as an example, you have set one up for yourself. I have one set up for myself. And so based on our payment, for example, the payment I do for my children is, I have 2 kids, and I set one up for my daughter when she was 6, and I set one up for my son 2 years ago, and when he was 4. You can set them up. The child needs to be at least 15 days old for a child. So for example, each one of my children, when they turn 40 years old, are getting a gift from me of $50,000 tax-free. Why? Because, no offense to my parents, they did the best that they could from what they knew how to do in terms of raising me, but they never put us in a position to be able to have that benefit of having any kind of money ever given to us. Everything we did, we worked for. And we're in the process right now of moving and buying a new home, and when you might need that money the most is sometimes in your 30s or your 40s. So they're both getting a gift from me at age 40 of $50,000. Then they're both set up till age 55. And at age 55, and I'm paying into this until they're 18 years old. And then they have the choice. They can either take over the payments at 18, or we can just let it ride out. And the key word is compound. This is going to be compounding the market. I don't want to get too technical, but the cap on the product is at 12.5%. And we have something called a floor ceiling, which is 2.5, which means in 2008, when everybody lost their shirt, anybody who had an IUL never fell below 2.25. Show me a CD in any financial institution in America that's showing you 2.25 on their best day. And so at age 55, they're both going to get tax-free income. My daughter's is going to be a little bit less than my son's because I started him a little bit earlier, but his is basically going to be right around $152,000 a year, tax-free every year till he's 120 years old. And my daughter's is right around it's like 137,000 she gets tax-free. So they're both getting a gift at 50 grand at age 40, and then they're both going to have a 6-figure income for the rest of their lives, including they are going to be, and we didn't even talk about this, John, self-insured. Because at this point, the policy, the death benefit, they're now self-insured. They technically never really even had to pay a dime for a life insurance benefit. And that's the power of it. That's the power of it. My payment's a little bit higher because I got started a little bit late. The earlier you do it, the better you are. But we are also set up, Jen and I, to make sure, and this is just one form of our retirement, to make sure that we have at least a 6-figure income tax-free for life, as well as our insurance. But I want to leave you.
People always ask, well, how are you not paying taxes on it? And I think obviously you can elaborate on that, but this is the genius part about it and why it is considered tax-free and completely legitimate.
The life insurance policy by tax, not to get technical, but you can Google the tax code 7702. There's your loophole. Whenever there's a life insurance product attached to it, life insurance is a tax-free item.
Yeah. So basically you're pulling out of your insurance policy on an annual basis, getting that lump sum. So that's why it's not taxed, because it's not really income. It's like you're borrowing against your own, and you're not borrowing in the sense you got to pay it back, right? You're borrowing against your own policy. You're pulling money out. So basically, in a sense, you're taking money out of a policy because you've survived and you're healthy, And they're saying, hey, you don't need to wait until you pass away to get all of that money, paid out to your beneficiary. You can actually start pulling money out on an annual basis. And that's, again, like you said, Brett, it's all how you structure it, how much you put into it, what you want long term. There's a lot of different directions, but most products out there that are like this, the IUL, the type that you're referring to, don't have the living benefits in case something does happen. There's only a few carriers out there that offer it. And that's what got me interested in financial services in the first place. It wasn't regular old fashioned life insurance, right? Term policies. Although I do have a term policy set up years ago. It just doesn't have the living benefits. It's not something that I can ever pull money back out of, right? It's only for a term. If you die within this period of time, your family gets a check.
Yep.
If you die after that period of time, they get nothing. And if it's something where you have a health issue and survive, you get nothing. So that's why this is a very unique program, but you need to talk to the right expert that understands it. And Brett and I have been through the ringer over the last several years with, being a part of different, carriers and offers out. And this one that we both have our own money into, that we invested our own money into, is by far hands down. People that know the profession know that this is the best product out there. And again, Brett can touch on you with the different. Touch on you sounds weird. He can touch on the different offers and the different ways you can structure it, because there are variances if you're getting it for yourself, if you're getting it for your kids. Like, we even have one on my mother-in-law, right? Like, and what's cool is, and Brett, you kind of touched on this as well, you're the one paying for it. You have control over it. So even though it is for your children, right, you have control over those policies, just like you have control over your own personal policy.
100%. 100% you do. And, and by the way, we have been through kind of the ringer over the last 8 years, and I'm sure you would agree. High five. We are absolutely crushing it.
Survived.
ATM hashtag.
That's right. So,
and you were 100% on point with everything that you just said. And, those are some of the loopholes, and that's the definition of insurance. And I'm just going to spit some facts, some statistics. I'm going to tell you a story about a dentist that was one of our clients. And then, I'll let you, however, you want to wrap everything up. But statistically, 1 in 2 men and 1 in 3 women will, and now I'm going to get morbid on you, unfortunately, but 1 in 2 men and 1 in 3 women will contact some form of cancer in their lifetime. And there's over 800,000 stroke victims per year. Every 44 seconds, I don't know how long you and I have been on, but imagine this, every 44 seconds, someone in the US has a heart attack. Over 70% of the people over age 65, they're going to require some form of long-term assistance during their lifetime. And over 40% will need care in a nursing home, like my dad's mom, like my grandmother, who has dementia. She's over in Paul's Run in Northeast. And it's not cheap. I'll tell you what, to be in a nursing home and to pay for the food and the living expenses and the medications and all that stuff, it's not cheap. I'll tell you that. And if you had something like an IUL set up, you could actually, like you were explaining, you can pull from the cash value to make those payments, to make sure that, your children won't have to come out of pocket. This can also be done for employees. So let's say somebody is a business owner and they have 1 employee, 5 employees, 12 employees, 25 employees, 150 employees. These IULs can be set up as employee benefits too. We work with Life of the Southwest, National Life Group. They're one of the #1 providers for elementary, middle, and high schools around the entire country, offering employee benefits like the ones you and I are talking about, as well as some others. They're also one of the main carriers for the police and fire associations for their employee benefits. Wow. And that's just to name a few. So every school district, not every school district in America, but we're talking thousands of school districts, not schools, school districts. It's almost difficult nowadays to get into a school district with our product and service because they're so locked down. But with those statistics I just gave out, I want to tell you a story about a dentist that we had out in California. She was in her mid-30s and she had just started her own dentist practice. And she had put a lot of her heart and soul into the dental practice. She had one dental hygienist, and She originally had an IUL with a different company and it had no living benefits. She then met one of our agents. They had talked to her about the living benefits. She switched over. She saw value in living benefits based on the statistics I just spoke about. She had the policy for less than 2 years. She went to the doctor. She had a mammogram, and she found an aggressive form of cancer in both of her breasts. She had to have them both removed. She had to step away from her new dental practice. And like any other business owner, she had oh, by the way, she lived in California. Her home was worth about $4 million. So we can imagine what the mortgage payment looks like. So she has the mortgage payment. She has the rental payment on the space for the dental practice. She has equipment loans. She has a hygienist. She was about to lose every single one of her patients. And on top of it all, most importantly, she had an aggressive form of cancer where she had to have the surgery performed. LSW sent her a check for $700,000 tax-free. What that allowed her to do was never miss a mortgage payment, never miss a loan payment, keep her dental practice, hire a dentist to come in and see all of her existing patients so that she didn't lose them. And after 2 years of going through her chemotherapy and becoming healed and blessed that way, she was able to go back into her dental practice and move on with her life.
Wow.
This is the power of an IUL having a life insurance policy attached to a tax-free retirement income with living benefits. That's the key.
I love it. Well, look, for you that hung out with us for the last, 30 minutes or so, 30, 40 minutes, and you have questions, make sure you get with Brett. He can definitely do some illustrations for you where he can work up different options. But I'm just telling you, when you look at the different, investments out there, I mean, look, we invested in crypto. We saw it rise and fall, right? Now, I'm not saying it's crashed and it's not still a long-term thing. Yeah, absolutely. I think crypto is going to be here for the long term. Look, we've invested in real estate. We've lost money. We've made money. Do I think real estate's a safe bet? Sure. I mean, there's lots of different investments out there, but you have to admit, real estate, crypto, the stock market, all these things, it's very volatile. And yeah, there's different gurus out there and programs and ways of getting into these different things. But to me, when you look at the insurance industry as a whole and you look at financial services and specifically the type of programs that Brett and I are talking about, they are the safest way for you to really protect yourself from the volatility, from the different things that can happen. And health to me is everything. And if you don't have your health, and you can't go out there and perform, you can't go out there and do the things that you need to do to create an income. And of course, a lot of my audience is network marketers. So they're like, well, what about our residual income? Yeah, absolutely. Look, that's something that you should do alongside of it as well. Absolutely. Not at all taking anything away from that. But the truth is, that's still something you have to build up. And until it's there, and then you have to make sure you keep it there, right? It's still not necessarily guaranteed, where when you do have some type of product in place, a policy like this in place, let's say you only have it for a few years, you only have it for 3, 4, 5 years, you haven't really built up your residual network marketing, your 401k isn't there, whatever you're looking at for retirement, this policy will help you if, God forbid, something happens and you can't work, or even worse, you pass on, your family is protected. So it would be worth it to at least do your due diligence and connect with Brett, and he can get you, the information you're looking for. And there was one question too, Brett, on here that I just want to ask. Elizabeth says, is there a hybrid insurance product with a long-term care rider?
Yeah, there are types of products that do include long-term care riders. For instance, some of our mortgage protect, right? So like a mortgage protect term life with living benefits product can come with a long-term care rider. Even a whole life product can come with a long-term care rider. And I believe certain different types of IULs, when structured, there is a long-term rider additional benefit. Now on that type of benefit, there's a premium to that. Whereas with the living benefits, there's no premiums to that. It's included in the policy, a long-term care rider, like an accidental care rider. Any type of rider like that is always going to be an additional expense to you. If you properly fund your IUL, you won't necessarily always need a long-term care rider. And that really is going to be on a case-by-case basis. But it's a great question.
Got it. Got it. And if somebody's not in the best of health and they can't do an IUL, you can also share some other options with them too, right?
In 8 years, myself personally, I have over 3,000 clients. My organization, we're running right now, we have about 42 agents in 10 different states. And if we collectively came together, we're talking about thousands and thousands of clients, and less than 1% of the population we have not been able to help. We always have a product, may not necessarily be an IUL, but we have some guaranteed issue products for people who have some serious pre-existing conditions. We have some people who maybe had, maybe some diabetes, some high blood pressure, cancer years ago, whatever that might look like, a stent or a pacemaker implant, whatever the condition is, we do have programs where we can help just about everybody. And it doesn't always have to cost you an arm and a leg if you're working with a professional and they're customizing it. Maybe one time we can re-engage, John, and we can do something on premium finance plans and Kaizen, which is basically an IUL on steroids. And that's where the bank is matching you dollar for dollar, but you have to have a high net worth of $5 million. And that would be a totally different conversation. But that's something, that we can always talk about. So
cool.
Hey man, I appreciate you. Any more questions or are we good?
No, you did good, man. You did awesome. I'm sure some of these guys will probably want to connect with you. And look, if you know anybody that needs to hear this conversation, feel free to tag them in the comments. Feel free to share this broadcast. And Brett, just appreciate you sharing, man. You got a lot of wisdom, and it's just cool to finally get this interview in place for people. And I think it's something that a lot of people have already gotten value from, but they'll get even more value if they are able to talk to you and you kind of show them some different options. But appreciate you, man. Have a good rest of your day. And guys, we appreciate you hanging out. Smash that heart button or the thumbs up button. Got some value, and we'll let you guys get back to your day. And listen, nobody cares. Work harder.
I love my life.
I love it. All right, cool deal, guys. Hasta luego. Brett, thanks, brother.
Peace.
Later.